Hello and welcome back. Today I'll be reading the news. So, the shares of cements rise as HSBC issues a bullish report. The broker sees increased consolidation and expects F126 to be peak of capacity addition in the current cycle. Textile stocks have gained an optimism over an Indo-US trade deal as American negotiators visit India to continue the trade talks. Shares of LNC India rise as the company signs an MOU with Cabel to collaborate on global critical and strategic mineral projects. Management is informed that the lineup capex of 9,500 crore rupees in F126. Godfrey Phillips has surged close to 9%. The stock is trading ex bonus today, and this is adjusting for two bonus shares issued for one share every shareholder. And a number of stocks also surging on order wins. NCC secures an order worth a little over 200,000 crore rupees. Mishrat Nigam transfers lighting Shanghai movers are also moving on the back order wins. Hello and good morning, and you have tuned to the news, and this is live from the studios, and we're seeing again that the green coming back on the screen. 25,150, that is mid cap Nifty mid 100. Nifty is managing to hold on that. Not much of a complaint coming in back because last week was an interesting week. Yesterday was a bit of a consolidation and a bit of correction, which is what we need. There are ups and downs, but it was not much of an up and down today as we come back today. We need to fix it nearly, but the fact is we've managed to cross 25,154, which is the August 21st swing. Today is the first thing that's happened is while the banks are leading up this move, and it is the Nifty 50 bank. The Nifty Bank, we've been speaking about that 55,000 level on the high. Nifty Bank has managed to cross that. It's on the upside. It will be importantly seen whether the both of these levels sustain the 21st August swing high and the 55,000 level on Nifty Bank, because Nifty Bank is not closed above 55,000 mark since 25th of August. Since it's an important level for the index to defend, and here we're seeing some bit of resistance at higher levels, but of course not to mention the today is of course the weekly expiry of the Nifty contracts, so keep that on your radar as well. The broader markets, well, as of now, the index taking center stage, the broader markets have taken a bit of backseat, but can't take away from the fact that mid-cap index is almost the day's high. It's almost 200 points and stock-specific activity continues abated. But it's a good time to get into the quick chart check as well. The Dhacha, the ICICI Securities joining us just to do that. Damesh, good morning and thank you for joining in. We managed to cross the important 25,154 on the upside for the Nifty. Do you see it as a sustaining one? Where does the index go? You can call on for the index. You call on the Nifty Bank and your stock specific recommendations for the morning as well. So for the week on the starting at a very positive note, if you look onto the weekly chart for the Nifty, I think for forming higher top bottom in formation, the first sign of revival and the upper momentum, yes, definitely we've managed to cross about 2,500 and 150 crores. 25,150, we expect the market towards 2,500 because the main indicator to understand the market where we have seen a major improvement in terms of percentage of stocks trading above 50-day moving average, where the last week it was around 25%. Today in this week it is around 58%. So majestic improvement in the market supported by, I think, if you look at the 20-day moving average crossing the 50-day exponential moving average, I think that this is the first sign of a revival in the upward momentum. So overall, I think the mood look good. Positive looking forward, and we expect, I think, going forward, Nifty heading towards 25,500 with a strong support placed at 24,700. So buy the dip should be the strategy going forward in the Nifty. As far as Nifty is concerned, definitely be a silent long term. I would say it's been concentrating in this range for 54,500 to 53,500, has finally managed to cross above 54,500. We expect Nifty Bank to head towards 55,800 to 56,000 in the coming days, because if you look at the technical setup of each of this Nifty constituents like talk for KSS or even HDFC Bank, 6% upside down strategy, and also the strategy for the bank nifty with strong support placed at 54,500. As far as stocks are concerned, yes, definitely we believe that. I think so. Capital as a sector, which is not in the much of limelight, but we should be talking back about action. But the index itself is corrected 31% from top. We believe, I think so, the way the things are planning out for the capital goods looking positive. L&T remains to be on a topic where L&T expect to target around 44,000 crores, keeping a stop loss of 35.44. Support look the right risk forward more favorable in the current price. So L&T is remained to be a topic at the current market. L&T is a topic, and the capital market side, that's where you're looking at the capital side, that's what you're looking at as well. So, when you're talking about DSH overall in terms of a move, we're not seeing it also doing anything right previously now in the last couple of weeks. We've seen it pick up the PS and walk to talk about the companies on one of these companies that is surging today, like the 12 to 13% gains coming. For reading turn strong volumes by chance, you have any thoughts that are on the reading charts? Have you looked at the reading turn and the thoughts on the Nifty IT as well? Overall, I think it's a good space. Looks above the risk floors look more favorable in the current market prices. Definitely, I think the Fed meeting will have a major impact looking forward in terms of the rate cuts, and also in terms of positive outcome in terms of US trade tariff. I also think that should be a positive for it. But definitely, I think so. It looks risk reward looks more favorable at the current market price, but definitely we stick to it. So the large caps like TCS, Wipro, and Infosys at the current market price looks more favorable inside the med caps. Yes, definitely let is something which at the current market price we're expecting 10 to 15% upside from the current market. And the insight in terms of Nifty and the Nifty Bank individual stocks as well. Thank you so much for joining us, but let's focus for now on the special segment where we will get you a few points of idea of a profit control. Prajita, who our money control, joins us today to talk about the stock that he's been tracking closely. Hi, I believe Bharat Electronics offers a good opportunity at the current levels. The stock has potential to reiterate, supported by strong earnings visibility, healthy order flows, and expected pickups in the business performance from second quarter of the current fiscal. The company's robust order book, almost 7,500 crores, which is times annual revenue, provides major projects includes LRSM, Himshaki electronic warfare system, Akash missile system as well, key radar and communications program. BL also expects emergency procurement orders and continues to build a strong long-term growth pipeline. Expecting more orders from the Ministry of Defense. From FY26, the management is targeting revenue growth of almost 17%, expecting 27,000 crores of fresh order. It also expects the margins to remain healthy at around 27%. Investment plans include 1,800 crores of R&D and 1,000 crore of capex. Alongside, the company is also expecting the more orders from the exports and targeting to double its revenue from the exports over the next 5 years. Overall, BL remains a solid play on India's defense growth story, and its stock is trading around 33 times the FY28 estimated earnings, which is reasonable given the earnings visibility. So that's it for today. Thank you.